some economies may gain also more relevance in the global stage of trading. I think places like Brazil that are historically neutral when it comes to wars. I mean, Brazil didn't really pick a side back in the World War II, didn't really pick a side this time around. It's pretty interesting how it tends to stand aside in most of the geopolitical issues. It may become a place that might provide a lot of commodities to different places. I think you need to question emerging markets that are dependent on commodity imports, such as China and India. I think they are not in a good position. I think they're in trouble. I think the Chinese economic model has worked incredibly well when commodities are cheap and allow them to buy them at cheap levels and then grow economically at inflated levels that we've seen in the last decade or so, and that's going to change. I think that we need to think about Europe. We're starting to see the push towards the U.S. to export some natural resources to Europe, such as natural gas. I think that will become a theme. We're seeing the push on ESG policies still on developed economies, but may force countries to continue to go after third world economies to really source those commodities, those materials. And so I think this is a trend that will continue. So we as a fund have been looking for what are those more third world economies that can actually provide some of those natural resources to developed economies. And so the Venezuela issue is for me, it's kind of baffling. It's when you think about it, I mean, what's the difference between doing business with Putin or Maduro? I mean, it's the same. You may say, well, one has nuclear weapons and the other doesn't. One is invading another country and the other isn't. But let's be honest. I mean, it's just as bad. I mean, this is we're dealing with two folks that we probably shouldn't be dealing with in the first place. But I don't think people were really considering the fact that oil is much more of a defensive strategically asset rather than an environmental issue, as most were seeing. Obviously, we want to perhaps transition away from oil, but not tomorrow. I think this has to be a slow transition towards a green revolution. I think that's going to happen, but not forgetting what we need today, and also selling strategic reserves and to drive oil prices down. I mean, those things don't work. We all know that. I mean, we need to keep our strategic reserves for whenever it's necessary. And so, again, a lot of things to unpack, but those are going to be the big changes, and the sanctions are going to be inflationary. That's the bottom line. That's what's going to be permanent, regardless if Russia or Ukraine reach a deal, regardless if there's a diplomatic, peaceful agreement between other countries regarding this. And I think the gene is out of the bottle when it comes to geopolitical tensions, and when that is out, it takes a long period of time for things to resolve themselves. And, our best case scenario is maybe a Cold War with Russia and maybe even China. U.S. talking about not exporting semiconductors. I mean, where other economies are going to be with a situation like that, depending on U.S. and China relations. Taiwan is in a very difficult spot here now. It's a manufacturing plant of the world. So, I mean, I know I'm talking a lot, but there's a lot of themes, and you can see that there's a lot of ideas here coming out too. I mean, you can be long commodities, you can be long natural resource companies, you can be long the physical form of it. I think housing market's going to outperform equity markets. I think equity markets are way too expensive still. I think cost of capital is going to rise. Interest rates in developed economies are poised to rise, with the inflationary problem becoming more sustainable. So there's a lot of things to be making money on and capitalizing in this environment.